video for Wednesday, June the 12th. Weakness in the pre-market session followed through into the daily session in the S&P. Dow down 116, S&P down 16 and a half, Nasdaq down 36, and that's partly due to weakness in the Asia overnight last night. And now in the pre-market, we're up about 7 and a half. So volatility is starting to pick up. It just sometimes it's a little tough when the markets open gap down and they pretty much stay down. It's a little tough to really look for real ideal setup. So sometimes you have to kind of give up a little bit, meaning in a perfect setup in order to get a trade or two in. But nonetheless, volatility is picking up. That means trading is picking up. That means that we are going to have a lot of trade setups. So when in doubt, stay out. If you're undecisive on what's going on, cash is a position. It's always good to just step aside, let the market come to you. But we are having some volatility, which I'm excited about. And I do think that the markets are, like I've been saying the last couple of weeks, are due for some sort of a corrective move lower and a tradable top being in place. Now, I have some charts I'm going to show you. We do have a downtrend line in most of the indices, actually all of the indices that we follow, the 5 that we follow, and I'm going to go over that with you now. We have not broken out to the upside. So until we break that downtrend line, we still have bearish symmetry and bearish price action and making lower lows and lower highs. So that we can't deny. If we have a downtrend, we have to short rallies, and that's really what we should be doing. Now, today, if we do hold this S&P up 7 handles, we might get a corrective move to the upside, but ultimately we should fail again. And if that really happens, and we do fail again, I think that we could see probably 3-4 days of continued selling. Maybe not so deep, but maybe down 50, down 16 to Dow, down 30. S&P down 4, 5, 6, somewhere around that line. But either I do see some choppy price action. I do think that dips will be bought, but it looks like some of the dip buyers that have been buying up at these levels, the upper end of the levels, are now probably gone, and now you're going to have some of the true market participants coming in looking to buy at certain key support levels, and that's what we want to watch for and want to look for. Because if that happens and fails, then I think a lot of the dip buyers will probably start to sell, and that's when you have that chain reaction where the markets come in and sell off again. So what I want to do is now let's go into our some of our indicators. Again, I don't have a lot because there's really not much to show you, but I want to show you our NYMO, and as you can see here, we did get that move up, and now we're back down again to that negative 75. So I don't want to be short. We came in down pretty hard, and we did get a move higher in the afternoon and then failed again. So this is not an ideal situation to go look to put on some swing shorts. If you're short intraday and you find a good short setup on a weak stock, that's obviously fine. But I'm talking about putting on some shorts. I'd like to see us come back up, regain this area, and fail again. As you can see here, that 20-day in the Bollinger Band really acted well. So if we can get back up one more time, even make a lower high from here and then fail, then I think we can really see an acceleration to the downside, excuse me, and then move much lower. Okay, so that's the NYMO. Now, we have Euro actually doing well, and we have this larger head and shoulders pattern. Again, has not validated, so it's only this pattern only validates when it breaks the neckline. So this could actually continue higher and then fail, and then we would just take the neckline out. But right now it has not done so, and it's barely just took out the right shoulder. So when you have strength in the euro, you're going to have dollar weakness, right? And look at the dollar and look at the S&P. As you can see here, we have movement in the same price action in the same area. So if we have the dollar weaker and S&P weaker and euro higher, so now we have an inversely correlated with what the euro's doing, and now the dollar's moving lower. So keep an eye on the euro as well, because that'll actually play a key role intraday as well. Now let's take a look at what's really driving this thing, and it's the yen. And as you can see here, there's 2 downtrend lines I drew here and here. When we have, as you can see here, when the yen bottomed, the S&P topped, and now we have an acceleration to the upside in the yen. So I think it's short-lived because I don't think the Bank of Japan is going to spend all of this money to devalue their currency as well as Ben Bernanke. I don't think that's why I do think longer term the markets are going to be pretty much bid up. And even if we have a correction of 8 or 10%, I do think the markets will be bid up going forward in the longer term. And I do think you see higher prices at the end of the year. But anyway, getting back to the yen, that's why I think that this will be short-lived and it'll probably end up coming back down, and that's when we catch another bit of a bid here. So 1600 is going to be really ideal. As you can see, we got down to about 1604 here. So we'll just continue to watch the yen. Now, the yen is up in the pre-market, but also S&P's up as well. So sometimes they don't always go together, but this is definitely a key driver is the Japanese yen. Look at the Nikkei. Obviously, it's inversely correlated with the S&P. We go down, S&P goes, Nikkei goes down, S&P goes down, as you can see here. So now we came in, we back tested this area. So we'll see if we can regain some strength here. Again, I do think that anything to the upside is going to be corrective, and that we definitely break and fail and move much lower. Okay, copper. Here's something that's really that you just cannot deny. I can't believe that a lot of these bigger funds are not looking at what's going on with copper and a lot of these other key drivers here of the market, and the market really hasn't sold off anything substantially yet, other than a down day of 140 points. And actually, we rallied yesterday a little bit, and we took back a lot of the losses to actually roll back over again. But nonetheless, this is a big driver, and I don't see how this cannot be ignored. But anyway, this is something that you want to keep an eye on, because we start taking out, we start taking out the key lows here. I think a lot of these managers, fund managers, are going to really get a little bit frightened, and this is definitely something that is not good. So this is definitely in the bear camp. Okay, now let's take a look at the VIX. And as you can see here, the VIX did pop up. We broke down. We got a little bit of a buy signal for one day. Now we're back up again to the top. I think the VIX actually starts to roll over again. I do think that we get, if the market does continue in the pre-market strength here into our normal market hours here, I think that obviously the VIX will kind of roll back over again, catch the 20, and then maybe we get one more sell-off, and then we start to move higher again. But I like to see 6 or 8% correction in the market, just to launch so that we can start buying some stocks here, as far as some position trades, a little bit of a swing trade. Okay, so here's the downtrend line I was talking to you about. As you can see, we cannot break out of this. We need to break out and hold on a closing basis to at least regain momentum and test the highs, and then we would reevaluate it. But right now, we can't. And as you can see here, we hit that right. Oh, actually, we did hit the 1600 here. So 1600 actually in the S&P cash, we actually did hit support. So that validates that support line. We have the 50 a little bit above it at 1612. So watch this area, guys. This is actually going to be important to see if we break out in the next couple of days. I do think that this is going to be telling here. And yesterday didn't hold true for the bulls at all. So the bulls kind of walked away, and we ended up being down on the day. So let's see if today they can recapture this and then break out. Interesting. Same thing with the spiders, as you can see. But we have a doji candle here, a little gravestone doji. We did try to break out, and then we failed here. But just let's keep an eye. We're getting oversold. Now we're breaking above the 20. So we can get momentum to the upside here, okay, on the spiders. Here's the 60-minute. Just want to show you. Here's that little bit of that horizontal support area right above that 200 period moving average, and we broke down. Now we couldn't break back above it again. So let's see if we can regain this uptrend line. At least that'll be constructive for the bulls in the shorter term. Diamond, same thing. As you can see, this area here can't break it, but now holding this long-term uptrend line. So that's going to need to stay put for at least a couple of days to gain momentum to the upside. Okay, and then our head and shoulders pattern, as you can see, we back tested and failed, and now we're at the neckline. It's going to be a critical area here to hold. If we do lose this area, then I think transports will just help to put momentum to the downside again. So we do have this bearish pattern that triggered this head and shoulders pattern. So now we want to see the transports either break down, or if it does hold, break back above and start taking out the shoulder area, and then maybe we get a head test here up at that 117.5. IWMs, really the same thing here. As you can see in the IWMs, I didn't draw that. Sorry about that. And as you can see here, same thing, guys. This really needs to hold, which is holding, excuse me, it really needs to break out in order to at least test the highs here in the upper end of this uptrend channel. Now, Russell's been holding really well, and I've been mentioning that the last couple of days. So maybe the Russell is could be an indicator that we are holding this line and that we break out. And Russell starts to break out, which is one of our leaders, then I think you probably have the transports follow, and then everything else start to follow suit. And then again, we may have that little test to the upside, but only time will tell. Here's Goldman. Our market was down. I didn't see, obviously Goldman would be down, but again, nothing bad about this chart at all. At all. Holding the 8-day, 20 days way down here. Even if you get down to the 20, it's still holding true here. So Goldman acting really well. Banks acting dynamite. XLF here broke back into the channel. No big deal, but we're still here. We broke back below the 20. So some of the banks are being sold. Goldman, JP Morgan, the leaders holding up pretty well. And we have Apple here just really not doing much of anything, holding that 50-day moving average barely. Now, I don't like the way the price action is in Apple, and I think if Apple does break lower, you're going to see a big flush to at least retest that 418 area again. Lastly is the Qs, guys. You can see here, whatever Apple does, really the Qs follow suit. All right, guys. Let's see what happens today. Let's see if we get this little bit of this strength in the pre-market to follow through, and if we do, and then we can get maybe an early afternoon sell-off and then take back what we've gained, then that's really just a driving force to say we're going lower. And then I'd like to put on some swing shorts here going into the end of the day. Now, if that does not happen, then you just got to wait for failure, and you really have to wait for a trigger to break a key support area before you really want to get short, just to get that confirmation. Remember, buys or dips are still really out there, and you don't want to be short in a hole at the moment. So any rallies right now would be a good objective short, at least risk-reward wise, and then we would reevaluate it. But longer term, I like the market longer term, and I'd like to see a little bit of a correction to actually be buy into. All right, guys, have a great day. We'll speak to you tomorrow. Take care.